Hello everybody, welcome back. I hope that you're having a wonderful day. Today we are talking about LLCs. We get a lot of questions, a lot of the same questions over and over again, and there's a lot of misinformation out there. So I am here to debunk a few things and set the record straight. So first, we're going to answer, can I put my house, my car, my personal stuff in an LLC and deduct everything? We see this a lot on TikTok, and I'm here to say, unfortunately, no. Your personal expenses are not deductible, whether you are paying them through an LLC bank account or paying them through your personal account or having your business pay for them. A personal expense is a personal expense and is not deductible regardless. Now, if you'd like to take a business deduction for the business use of your home, for a portion of your home that's used regularly and exclusively for business, or if you'd like to take a deduction for the business miles that your vehicle is being driven, those are fine. You don't need an LLC to do that, though. You just need a legitimate business activity with a profit motive. So, if you're starting a new business or buying rental property, should I start an LLC for this activity? And the answer is maybe. As with most questions, the answer is it depends. First, I would say consult an attorney to be sure to understand the liability implications, the legal implications to creating this entity. An LLC is a separate legal entity from you. Also consult a tax pro. Here in Washington State, it is relatively inexpensive to start and to maintain an LLC, but in California, for instance, there is an annual fee that is $800 a year, and it does add complexity and accounting fees and such. So those things are a consideration in those states. So definitely know what the rules are in your state. With those issues aside, though, from a tax perspective, if you are the only owner of this LLC, the IRS looks straight through it, and you report the activity exactly the same as you would if it wasn't in an LLC. So a business activity will be reported on a Schedule C, like a sole proprietorship. Rental activity is going to be reported on a Schedule E, just like you held the real estate personally. So the LLC by itself doesn't change anything in your tax situation. So then, of course, the question would be, why would you start one then? And for businesses, tax pros like me in states like Washington, where it's inexpensive, like the flexibility of an LLC. So the LLC is a chameleon. Like I said, initially, if you are the only owner, it's just taxed like a sole proprietorship. But the LLC allows you to add members or to elect S corporation status. And those are things that you can't do with your sole proprietorship. If you have a sole proprietorship and you want to add an owner, now you have a partnership. You're creating a new entity. If you want to be taxed as an S corporation, you have to create a new entity to do that. Your LLC can do those things. So you can set up your branding, your business name, your bank account, your EIN, all of those things simply, and be taxed simply as that sole proprietorship. But as your business grows and things change, you can keep that and just make those elections to be taxed differently, add owners, remove owners, whatever you need to do. So why would you not do an LLC then? Really the only answer I can come up with on that is that there are states like California where it is expensive and cumbersome to do that, so it may not be the right option for you. So if you started an LLC and the question is, now what? I would say make sure you're tracking all income and expenses for the business or for the rental real estate. All the money coming in, all of the expenses going out, keep track of all of it. Consult with a tax pro to help sort through what may or may not be deductible. But for the most part, if you're spending money to conduct that activity, it's generally going to be deductible. So keep track of that. If there's more than one owner, keep in mind that unless that other owner is your spouse and you're in a community property state, you most likely will have a partnership tax return filing requirement. Partnership returns are due a month before personal tax returns are due, so it can definitely catch you by surprise. So be mindful of that. Also be mindful of the fact that your LLC would need to be renewed with the state every year. In Washington State, that annual report filing is pretty simple. It asks you to confirm that your contact information hasn't changed, the owners haven't changed, and they want their annual fee. What did I miss? Are there other questions that you have about LLCs? Other questions that we can tackle? Definitely let me know. Otherwise, have a wonderful rest of your day. Bye.